Hello everyone and welcome to a new market update. I'm Joe from JCS-Charting. This is a very nice research from Carson Investment. They say whenever the S&P 500 gained over 15% by the end of October, and that data lasts all the way back into the 1950s, the likelihood of getting a green November and December is very high. Summing up both last month, there's actually a 95% probability that we end up green. There were much more occasions in December where it didn't work out, but for November, the likelihood is actually very high of closing higher in November, and that fits my outlook very nicely, and we are jumping right into it. As always, we're going to start off with the DAX hourly chart here, JFD indication, and I zoomed out here a bit to give you a better understanding where we are and what is most likely to happen. First, I would like to start here on the 17th of October. That was the last impulse we have seen to the upside in a 1, 2, 3, 4, 5-wave structure, and then we saw an A, B, that is called a flat. We had an overshooting B structure, and then in my point of view we went all the way down to leg C with a lower low compared to this one, which makes it an expanding flat. And while I zoom in here, we had that red sequence, and I was twittering and also telling my members at my Discord quite a lot. 24048 is very important to hold on the hourly close. We had a spike right here, then we had a couple of back tests at that level. Yeah, and then on Friday, that first candle with the cash opening actually broke that level. That told us we are going to see most likely that minimum target zone. Most of the time, the red one, 38%, 23,912. is a reversal level. If that doesn't hold, we usually go all the way down to the 161 expansion. And here we are. This is what happened. We went all the way down to the 138% expansion, and then it started to turn. There's also that bullish Wolfe Wave shown here in blue. So we got a low, a high, a lower low, a lower high. Can also take this one here, but then you don't really get a wedge, and then it triggered right here. Once we were making a lower low again, we were hitting that lower trend line to make it actually look nice. And now on Monday I expect that DAX is able or should be able to start a squeeze like shown at the current projection. Yeah, and that Wolfe Wave can be also seen at the cash market. Once you zoom into the 15-minute chart here, there are actually two. There's a one which is shown here in blue, which is basically the same we see at the hourly chart. And then there's another one which starts right here. Here's the low, the high, the lower low, the lower high, and the lower low. So we got plenty of target lines here for the DAX to run higher. And we are staying with the cash indication. This now is a H4 time frame, and it's a little recap on where we are right now at DAX. This is here the whole sideways consolidation we had over the summer months into the middle of September. We had a large WXY correction, plenty of little subwaves with an impulse in the end, and then DAX started its first impulse to the upside. We talked about that in the past. 1, 2, 3, 4, 5. I count that as our first wave to the upside. It ended up with a new all-time high at 24,765, and then I gave my members that hint that wave 2 likes to be very deep and it likes to be very sharp, and this is exactly what happened. We went almost all the way down to the 76.4 retracement to set wave 2 in my opinion, and then we just talked about that impulse on the hourly chart. This is here 1, 2, 3, 4, 5, wave 1, and this, in my opinion, this is wave 1 of wave 3 already, and then we saw that A, B, C correction, most likely as wave 2. Now DAX really hasn't, let me just have a look before I give you here wrong information. Now, we were hitting already the 61.8 retracement with that low. So that first wave is already retraced by 61.8%, which is usually a sign of bullish nature before we see something bigger into the opposite direction. Now, our main C target was at 23.989. This got hit on Friday as well. And we closed a couple of gaps here as well, and there's still an open gap, and most of the time, whenever there's a wave 3 starting, these gaps remain open. So I assume we are starting, might be Monday already or mid next week, that impulse to the upside. And we are jumping into my Discord very quickly. First of all, if you want to have information like that about smart money, gamma exposure, you see here, this is a DAX main channel with various time frames. You see my setups. There are chat rooms where members are helping each other, and where they even ask questions. And when I'm online, I'm trying to answer them as soon as possible. There are nice sections about trading psychology. I think every trader finds himself somewhere there, and then there are various channels with so-called threads and their time frames. Silver, net gas, stocks. You can request that as an advanced membership, and if you want to be part of that, you're welcome to join at www.jcs-charting.com. But I wanted to show you the smart money flow of DAX. This is an update from the 29th. I will update for members the latest data from Friday. I just want to show you that smart money kept picking up the entire last week. That means they kept on buying the lows. And I know DAX looks much weaker than the US market, but it tends to switch around just before they launch any bigger impulse. It doesn't really matter in which direction, but this indicator is telling us, oh, there's something bigger behind the scenes, and this actually here looks bullish to me. The SP 500 hourly chart here, JFD indication, though these candles here run all the time. Here's the all-time highs at the pre-markets at 6,921. And the S&P started to sell off. There was also a smart money divergence. I kept on saying they are dumping for some reason. Sometimes they just dump on options in order to reload larger positions once they have been consolidating for just a couple of days. Then there came that let me just check. That candle here, that was the closure candle actually on Thursday. And this is a recovery candle with earnings of Apple and Amazon. And it bounced right back. But that candle told us that red sequence here triggered, which bounced off very nicely in the first place, which I longed. And then, I got rid of my positions somewhere out here. I'm still holding a few from down here, but we have hit now with that second selling leg at the 127% at 6813, which is usually our first min target, but most of the time a proper reversal level is the 138 expansion or the 161 expansion. And since we haven't hit those, I assume the S&P 500 might dive for another leg to the downside to find some stabilization around these min target area. If that doesn't hold, we probably retest 6783 before we run higher into the end of next week. And we continue with the H4 time frame. It's a cash chart, and I've posted that on X many times. This is my latest Elliott Wave count, and once I zoom in here, and I must admit, because some people are saying Joe is just showing the good charts. No, I'm not. Actually, this one is a great example that sometimes I'm not right, and for instance, I thought this leg here is going to be duplicated for a second leg. That didn't work out, and I was actually hedging heavily here at 6,720 and caught that move just on time, by the way. However, we are, in my understanding, in wave 3 of wave 3, which finished most likely here on the 29th, which was on Wednesday. We have hit the first min target of the blue sequence, and then we pulled back for a wave 4, in my understanding. If you recheck on the hourly chart we just looked at, wave 4 might dive a bit lower before we launch into wave 5, and this one here is the most optimistic into 7,004. The 100% target is somewhere between 6,972, but the minimum requirement is just the 138% expansion of that blue sequence, 6938. From there we could see another wave 4, the larger one. This here was the first wave. Second, if wave 3 finishes right here somewhere, we're gonna see wave 4, and then I expect actually an extending wave 5 for November, which could squeeze somewhere near 7,200. NASDAQ 100 got basically the same Elliott Wave count, so I'm just showing this hourly chart here as well. We had here a similar level to the S&P 500. It was 25,836, which we bought for the initial bounce here, and it was holding for a couple of hours before the NASDAQ lost that level, and with that candle we went all the way straight down to hit the first min target at 25,722 of that red sequence. Very advancing to trade here, and I didn't really hold any short position here. I just went on the long again. I got rid of a few positions right here at the top, and then NASDAQ sold off. It didn't make a lower low as the S&P 500. It stayed with a higher low. But also here, the red 138% expansion is open at 25,676. So we might see another dive toward that level, or even the 161% before we run higher at the NASDAQ into the end of the week. The Dow Jones on the H4 time frame, JFD indication, and I'm showing this chart because we have here another trigger for higher, which means that blue sequence here triggered above 47,636 for higher, and the minimum target range is between 48,317 up to 48,592. Bonus target is getting near 49,192. There is the possibility, for instance, that we see something probably like that. Well, it's not as clean as I thought. A flag channel that we probably test that upper boundary, dive back down again, probably with a little overshoot to test 47,067. Before we run higher within that blue sequence. It's very common that we starting to oscillate around that 100% level or do a deeper pullback after that, or a sequence which is such as big has been triggered. And the Dow theory, divergence between the industrials and the transportations, keeps persisting. We talked about the large one here, the red one, and the smaller one. The Dow has had another all-time high last week, while the transportations even failed to get above the previous week's high. And even that close here was much closer or much stronger than that kind of shooting star the Dow left behind. But still, that divergence persists, and I can tell you one thing: if it's persisting for that long, and there is like a double one, and if you actually zoom in into the smaller time frames, you will find even more. That usually ends up in a larger correction, which I assume for next year. Here's my plan for gold. You see an hourly chart here. You see that red sequence, which hit all the minimum targets. I started buying at 3946, by the way. And I still have a larger position waiting at 3872. But the big question is now, and I have to say gold did that quite a lot this year. It started to look very corrective in like an A, B, C, and then it started to oscillate around a certain level. This time it's a 100% level of that green sequence at 4021, and it triggered for higher. So I assume we actually see 4073 very soon. But what I'm trying to say is gold looked in a lot of occasions this year very weak, and then out of a sudden it accelerated to the upside and broke out. That trapped a lot of people, including me, many times this year trying to short gold, and that simply didn't work out. So be very careful here. And once you look at my daily chart, you understand why. By the way, 4118 is a magnet at gold. This is a crucial level in my analysis. Either we see a large rejection there once we break on the hourly close, and H4 closes even better, we run higher in that blue sequence. And this is my gold daily chart. It shows basically my primary cycles, which lasted more than like 2 years, roughly like for 6 months, and it corrected by 10%. And I gave my members that chart right near the top, and we were roughly at 39% by that time. It made 40.39% from that low. I said, well, gold is ready for correction, and if we duplicate that amount of correction, so somewhere between 10 to 12%, we end up somewhere near 3,880, 3,870. The low we just saw was at 3,886. Timing is a bit early, but the magnitude of the price is actually good for a buy at gold. This was also, that could have been also already the correction of a 2.5 year cycle, by the way. This is a minimum requirement, 10%. If it expands up to 15 and to 70%, that's still fine in my point of view, before gold is starting to pick up that rally to run higher. On the daily, by the way, we triggered above 4095 for higher within that blue sequence. The first target is 4519, but usually it jumps higher. And last but not least is silver. JFD indication here once again. Yeah, silver was running very clean within our cycle pattern here. The low was a bit early, but we were hitting our 138% expansion with a slight overshot before silver started to turn around. That of course was posted just on time at my Discord for members. And then I came up with that green sequence, which triggered right here. We got first initially a rejection, but I told my members somewhere here, hey guys, I believe that silver might be done because timing, even that was a bit early, but price fits such well. We most likely run into that green sequence, and that is what happened. We triggered with that candle and we were hitting the second minimum target, the 138% expansion once again on the dot before silver started to reject here a little. 50.208 is the make or break level at silver. If we're seeing a second leg down, which means a rejection from there, or if we run straight through, which means we see a breakthrough. And I got a few stocks for you. This is Alphabet. I must say I was wrong on that. I was shorting with that gap up here into that candle, and well, it worked out for 3 weeks. But then I got stopped. I had my stop just above that high here, somewhere around 260, and I got stopped out already the previous week at Alphabet. That means that pattern here broke out to the upside without that pullback I was waiting for right in that period of that suggested cycle low. We were hitting already the first target of that pattern, and 100% move is at $305 at Alphabet. Next one is Meter, and I had here initially an ABC, and I thought we are done with that low. I gave my members that hint: whenever we break that 100% level of that red sequence, we most likely run into the red projection. We haven't hit any minimum target yet, so I still assume we get to see $629 or even 600 before Meter is turning around. That still counts as an A, B, C to the downside. The C leg is then an enlarged ABC, even we have that large downside gap here. The green sequence here above 775 triggered for higher, and these are the minimum targets for Meter. Yeah, the next one is Tesla. Most people had a bearish view on that. I kept having a bullish buyers since April, and I'm still holding actually my stocks and options on Tesla. We had that triangle here. I kept saying it looks like a consolidation pattern within the new trend, and we hit the first target, the 100% target. The blue sequence finished, that green sequence finished, and now we are at a very important level, $462. We got a rejection right here. I think that was an earning candle as well. We gapped above it, and then we sold off the entire session. And we had two other candles here on Tuesday and Wednesday of last week, which rejected there as well. Once we get a daily close above 462, we get much higher levels as a target. Minimum target range is then between $530 to $557. This is Apple. I must say I haven't really completed that chart yet, but yeah, Apple completed that green sequence. It hit already the minimum targets of that blue sequence. They are still $287 open. Once we have a push such as this one above the 138, we usually run into the 161% as well. Next suggested cycle low is next year in summer. And by the way, this looks like, well, it is actually a wave 3. We had the first wave here and then a triangle consolidation within Apple before we were breaking out into new all-time highs. And the last stock I'm showing is Microsoft. We had that large descending broadening wedge. We hit the first target of that pattern, and I still believe we are not done with wave 5. So far we have seen a very nice 1, 2, 3. Wave 3 most likely finished here. I thought it's already done here, but then we had earnings, such a large gap up, and then yeah, it corrected into September. September. Now a similar pattern. Microsoft had earnings and gapped down. This is what happened on Wednesday or Thursday, I believe it was Thursday. I believe we run into an ending diagonal here in as wave 5, which should end somewhere near $570, and that would be also another hit of that green target line. Correction then into summer of next year. I'm done. I hope you enjoyed that video, and if you leave me a nice comment or leave me a like, you would make me very happy. I keep my folks in the Discord updated, and I probably see you tomorrow. Have a nice remaining Sunday. Bye bye.